Oh man, this new software is getting me left and right. Too funny. What's up, everybody? Just kind of hopping in. Ooh, I got a little echo. All right, so Twitter's up. It looks like. Let's see what else. If you're on YouTube, actually, YouTube's probably the best way to go on this. If you want to hop in and chat, we can see that. Ooh, looks like there's new captions. Chat. Cool. Let's see. Right. Yeah, it doesn't look like I wish Twitter did a better job integrating some of these like multicast softwares. Be so much better. All right, give everybody just a little bit. Thanks, by the way, to the graphics team putting together these cool little things. I always love it. They put some crazy ones together. I like the holiday ones, but I always snap those and uses like my profile pics. But what's going on, man? Yeah, we are here. He's in. We can actually, I think I can put this. Yeah. Well, yeah, I had to jet to do this. That's what I had to do. But yeah, I guess if you're still in trades, let's see. I couldn't really. Yeah. They'll probably work out. Let's see. Yeah, we're coming on low a day on SPY. Nothing crazy, but it's all good. Appreciate it, man. Yeah, I try. It's been a little scalpy lately, for sure. What can I say? I think market's in a bit of a transition period, actually. So, I'm actually more constructive to the long side, especially this week, for sure. But most of the stuff we don't have. What's funny? We normally get NFP on Fridays, but this Friday, oddly enough, we're actually not getting non-farm payrolls. So, yeah, it's I think we get it on the 10th. Yeah, very cool. All right. By the way, I'm not going to really cover this right now, but definitely keep a watch on Boyle. Even right now, I think, I don't know. This thing goes crazy, but nat gas at 250. We're looking at, wow, coming back up at 270. I just feel I was on Spaces with Wolf this morning. I just feel like looking at nat gas around $2 is like, it's like looking at oil at 10. Not that it couldn't go lower, because I'm pretty sure oil did go. Well, I mean, we know it went negative for a while, but I think it's gonna be a big time opportunity at some point. But as long as if we can reclaim 270 on nat gas by tomorrow, I think we continue the uptrend. So that's my 2 cents on that. Cool. So I'm just gonna hop into this. I'm gonna shut. We can put this back down. So if you're new to this, appreciate you guys showing up. Like it, retweet, share out the YouTube link. Always helpful for sure. If you're an analyst on the team, most of them sometimes they hop in, hop out. Just request up. The link is in the analyst chat in the Discord server. EQT, yeah. So this is EQT. So EQT and EOG. EOG is more like longer term. EOG Resources is probably like your, best alpha in the space for nat gas. Those are nat gas equities, by the way. So EQT, massive amount of beta, meaning it's going to be a big mover. Whenever somebody says beta, like something has a high beta, it moves more than the larger cap equities in its space, for sure. Yeah, highly correlated to nat gas futures. All right, so I'm just gonna hop into this and we can get this started. Oh, I guess this is fine. It doesn't really matter. Hopefully it's not too much in your face. Cool. So welcome. By the way, it's the lady's birthday, so happy birthday, Jessica, if you were watching. Love you. But also, so before we get started, just got to point out, options are not for everyone. Please get a copy of Characteristics and Risks and Standardized Options before you start trading. You can get a copy of that by calling 1-888-OPTIONS, 888 options. and carefully consider whether trading is for you, considering your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. Cool. So that's done. Let's get on with this recap. I actually didn't. I forgot to write it down. I was taking notes this weekend. So let me see. So we didn't have a Monday trade plan last week because of the holiday. So typically I don't. What I could say is, you know what? Let's do this. So I can actually. Let me go. So there's a couple about. I want to get to this. This is last week's economic recap, but this week, let's do this. I'm going to pull up another screen and then I'll bring it over here. So previous month, what I wanted to do, can you guys see this? Yeah, this is fine. So we had last month, where are we? So this is the end of February. You get pretty far down here. We had CPI and PPI that I want to get into. So we had the FOMC minutes last week. Let me just go back up here. Sorry, I hope I'm not making anybody crazy busy or dizzy. NFP. So I'm going to mark this non-farm payrolls February 3rd. This is going to be a pretty key level when we look at the indices, and it's going to help dictate our pricing for sure, or our price action for sure. Core inflation rate came in 5.6. Consensus was 5.5, so it's just slightly over. Overall, we are trending down. Let me see if I can move this screen out of the way. Overall, we are trending down for the inflation, which, I think is it's a given. The question is, like, as we slowly trend down, how fast does this inflation deflation speed up? And if you're looking at any of the FOMC notes from Powell's speech, he mentioned deflationary. Like, I don't know. I think I wrote it down somewhere. No, I didn't. He mentioned deflationary a ton. PPI came in hotter than expected. Also 0.7. Consensus was 0.04. So this is a big one. I don't know why this is showing up like that. It should not. So yeah, we came in significantly hotter than expected on PPI, which, quite frankly, just that's the one that to me kind of spooked a lot of the market. We had some Goldman Sachs updates also. I'm going to see if I can get this CPI in here. Where did it go? Retail sales. No. PPI. Where is it? Here you go. Month over month. Oh, geez. I keep pulling up the wrong one. Anyways, CPI came in a little bit hotter than expected. PPI also came in hotter than expected. Inflation rate 0.5%. That's fine. Where's PPI? And so between the two of those, that's really what got the market kind of pulling back. And then Goldman Sachs, I believe it was, comes out and adds a third rate hike to their forecast. And that's really like the kicker. So, remember, this is stock pickers market. I don't think that changes whatsoever. But that said, we're still kind of looking for areas where maybe the market overdoes it just a little bit. Do I think that we get a third rate hike this year? I don't know. And so SPY's coming into a pretty critical level. We had a nice gap up this morning. And it's constructive. Where is it constructive? I think it's more constructive on the metal sector right now, not from the stagflation, perspective that we had before, but GDX, gold, silver was, high on watch last week. I think we hit some of those levels for sure. And we have a nice constructive bounce today. I really like some of that. I really like that price action so far. Do I think that it can explode to the upside? No, not necessarily, but the dollar's at a critical level. I think that this week we could get some decent buys on some of these gold and silver equities, and maybe even some of the gold and silver miners. We'll see. Hanging out Wall Street trying to get some insight. Yeah, you guys, I'll put this. Let me see if I can put this up. Yeah, no, that's too small. Anyways, let's go back to this. Cool. So mortgage rate hit a pretty heavy high. So 6.6 on the 30-year national average. That's massive. I want to keep this on watch for the housing market. So housing market is starting to slow, and I mean it's like ever slowly, slightly. It's not super. Uh, it's not like clear when you look at the week to week stuff, but on a broader spectrum, like when you pull the charts out quite a bit, you'll start to see some of that housing data seriously slow down in terms of new sales. So we got PCE last Friday. That was the biggest one. So here we can go back into, cool. We can go back into this guy. So home sales, here's the home sales data. So we got actual came in at 4 million. 4.1 was consensus, so slightly lower. Global services PMI flash actually came in at a positive number. So 50 basis points, or not basis point, a 50 reading here is expansion. The consensus here was that we would decrease, or that we're still in contraction rather. And I think this is where it's kind of like the market's having this like give, take. And, it sets up from an indice perspective for a lot of chop. I mean, a lot of chop. We're talking on the server this morning about iron condors, and honestly, I think this is definitely a good spot to be putting some of those on. So I might take a look at some today. If we don't get through, I'm going to try and go through this weekly plan a little bit faster, and then if you're in the servers, I'll go ahead and do a second, probably towards the end of the day, maybe even aftermarket planning session for the rest of the week. This afternoon. Initial jobless claims. This is the one. So the job market, Powell talking about, strong job market. Jobless claims are slowly starting to trickle down, right? And so we are seeing that is also true, right? And if you go back to the major speech, it was, to me, him basically saying, look, hands off he didn't really care where the market was going. And I think to me, that was the biggest takeaway, is that he's not trying to control the market. He's just going to do what he's doing. He's not going to be looking at the market one way or the other. He's going to let the market participants speculate. And it is what it is from his perspective, right? He thinks that inflation's going to continue to stay higher. And he keeps saying, hey, look, rates are going to be higher for longer. And I did want to get into this. I'm going to go over this recap. And the thumbnail for this week was like, will T-bills be the last of us, right? So there's this really funky situation going on in the market. And, it comes to the interest rates and Treasury bills. If you guys are not on this, I'm so adamant. Like, I'm pounding the table right now. I think that this is going to be a short-lived opportunity to actually buy government treasuries like T-bills. Like, the interest rates are insane on the shortest side of the curve. And I mean shortest, like buying 4-week T-bills, like the shortest expiration, the shortest duration possible. I look at this stuff and I'm just like, my mind is getting blown. But this is the yield curve, the short end of the yield curve, meaning like the shorter duration bonds. And Treasury bills are paying out significantly, and I mean significantly higher than the longer term ones, which doesn't make any sense for most people. But this is the whole job of the Fed, is to pull in the dollars and slow spending. So if you're out there and you're looking at some of these yields and you're thinking about CDs, I know a lot of people are thinking about CDs right now. I'm getting pinged by friends and family. I'm like, you know what? Honestly, it looks good. What I'll say is when we go into it, don't think 52-week, 1 year duration stuff. Think very short term. If you guys remember when you're in elementary school, like I did this in my elementary school, I remember like an exercise. It was like, would you rather have a penny a day for like a year, or would you rather have a penny compounded a day for the same amount of time? And the penny compounded a day was like a million times more than the little penny a day. And when we look at these interest rates on the short side of the curve, or short side of duration, think about a 4-week interest rate at 4.5% or more. Compound that every 4 weeks over the course of a year. That's actually like 60%, right? So, and these are 100% guaranteed rates. Like, this is the thing, I'm torn. I live in the stock market. I'm an equities guy. I'm not a bonds guy. I'm not. But when I look at this and I'm like, it reminds me of like crypto when we had these Ponzi's, like you would get this very short dated term, loan me your crypto. And it was like, okay, this cannot last forever. The situation that we're in terms of the yield cannot last forever. It's going to be a short-term thing. So I'm thinking the next 6 to 9 months, take advantage, right? If you have cash sitting on the sidelines, don't put it in long duration stuff. The shortest expiration, the shortest duration, just compound it. And if you do it that way, by the time the market stables out, which I think is steadily now, but shows like a pretty clear trend to the upside, then those bonds and CDs or whatever are going to start to mature, and your cash is going to get freed up, and it's going to be perfect timing. But if you go too far and you say like, oh, I want a 1 year, 5-6% interest rate, or 2 year, 5% interest, you're going to miss out on quite a bit. So I would not go that far, significantly shorter dated than that. But anyways, so the rest of this, so PCE, so core PCE month over month came in at 0.6, right? So this is personal consumption expenditures. So how much are we spending? The thing with this to me is like, yeah, so our spending is going up. Consensus at 0.4%, came in at 0.6%. Do I think that we're buying more things? No, actually, I really don't. I just think that the stuff that we're buying is freaking costing more, right? I had a buddy visiting from Idaho yesterday, and I was laughing. I was like, dude, how much does a carton of eggs cost? And I'm like, you go to the Safeway down like by my place. We have Safeway. An 18 pack of eggs or whatever is like almost 20, like 15, somewhere between 15 and 20 bucks. I don't go shopping a whole lot, but like I looked at them just the other day, and it was way up there. We're talking like $1 an egg. And orange juice is crazy expensive now. I don't know why. But yeah, I think things are just getting more expensive. And he was telling me, I thought he was going to say like his gas price is like $2.50. And he's like, no, he lives in Idaho, and he's like $4.50 a gallon. I'm like, dude, our gas is like maybe $5 bucks, but it's higher everywhere. That's the crazy thing. So I don't think that we're buying more things. Maybe the velocity is coming down a little bit. But what we're spending is just costing us more. And that's in the PCE. So, it is what it is. This is what the Fed's main gauge is. The year over year, 4.7 was the actual that came in. 4.3 was consensus. I think I can click this. Yep. And it gives me it pulls me over here. So slightly lower, right? 5.2. We're coming from 5.5. This is core PCE. And so this does not include energy and food. If you did look at energy and food, I think that's where PC price index month over month, this one is a little bit higher, 0.02 to 0.06. They're measuring different stuff. Anyways, slightly higher. So here's the trend. It came in a little bit hot, right? PC year over year coming down though, as a net net trend, if that makes sense. Core PC, yeah. Personal spending. So spending down, income down. Consensus came in at 1. So yeah, the job increases, or the unit labor cost, let's say, I believe we're going to get that this week also. It's not continuing to go up. That was one of the biggest things last week. So let's get back to this. All right, so we went over PC. Consumer sentiment, 67. This week we actually get something called, let's see. Well, I'll get into it in a little bit. So instead of continuing here, I'm just going to hit this. So I had to update this slide just a little bit. Let's see. So we had, actually, this is going to be a 15, 11, and a 2. So we had some more beats. So Disney, Cisco, Home Depot, Walmart came in, all beating. Coke, meet expectations. Still, though, 11 misses. What we're seeing is still more of this trend. I think it's like, okay, expectations were super, super low, clearly, and some of them too low. We have a big week of earnings coming up ahead of us. And this is some of the, I just grabbed this from Earnings Whispers, right? So price moves, more than half are to the downside. All those, a lot of the reports are kind of beating expectations, if that makes sense. Hey, Benny, are you here on Twitch? What's up, man? Uh, oh man, where am I going here? We're all over here. Have fun, guys. Let's see. I'll just overlay this if you're chatting. More than half are actually beating, I think, from a broader perspective. But the ones that are having the biggest price moves are the ones where we're expecting way downward revisions, and are having upward revisions on their end. So that's what we want to look for if you want to take some major bets. The short squeeze stuff like the Wayfair, things like that, those are significantly lower. Here's the thing: Warner Brothers was reported results. They're actually doing good today. Actually, last I checked, let me see. WBD. This is one stock I've actually been purchasing, by the way, and I did want to take a quick chat on Warner Brothers. I like this company. What they did talk about on their last results was using some of their like IP content, like their characters and things like that. This is one of those where it's like, to me, pretty undervalued. So Warner Brothers Discovery, they own Game of Thrones, they own oh my God, Hogwarts, and they own a lot of good franchises that they're really just not capitalizing on. And that was kind of what they were talking about this last quarter. Yeah, it was a miss for sure. But if there was another stock that could be from a streaming perspective, like the next Disney's thing was like they have these epic characters. Warner Brothers actually has the same, believe it or not. And they're just starting to talk about it, really. And this stock, by the way, has been on a huge rebound all year. I didn't catch it, sub $10. No, it's up 85% since, this year almost. But my buys have been in like the $13 range. I wanted to see this earnings report really go through, see what they're going to talk about. I think there's still some risk in this, but this will probably be one that I likely end up building like an actual position in moving forward. This is not a short-term thing. We have this major $16 level to deal with from a price action perspective that we're at right here, right? We're just tagging it right now. So this is the key pivot. If WBD continues to trade above 1650, let's say next month, because the month is almost over, and holds, like this is just clean breakout, continuation to the upside. We got a lot of room on this guy for sure. Did it deserve to be 60, $70? No, I don't think so. That's just squeezy stuff. But could it have another double in from here? I think maybe. So that's just me speculating. So back to this. That's what we're looking for. On deck this week, we have a ton. So Fubo, I know a lot of people look at. The only major one in terms of the Dow 30 is going to be CRM, which is Wednesday after the close. Some of the larger, like this is where Snowflake, this is the biggest cloud stock. I mean, it's a great company, don't get me wrong, but the valuation is kind of like, I don't know. Take a look at Datadog reporting last week or a couple weeks ago. I haven't looked at that chart in a little bit, but I'll take a look right now. I think Datadog, they ended up reporting a good quarter, right? And then they just proceeded to sell off. Yeah, so this is Datadog. So reporting here, beat, $90 and just sold off. That's what I think we have to look forward to in something like a Snowflake. I would be very, very cautious of those high growth at any cost type companies. Others like that used to be like that are not so high is Zoom, right? Like take a look at where Zoom is today after the close, or today right now compared to where it was. This is a different story altogether. Do I think that Zoom is gonna explode? No, I don't. But is it one? And this is the question, right? Do we think that Zoom is expected to be horrible and maybe it actually isn't? That's very possible. So earnings, here we go. EPS normalized estimate 0.82. So they have revised up 4 times, $1 billion for the year. They're estimating completely flat. It looks like. Just poke it around here. live with you. So if I just look at these things, yeah. So quarterly earnings expected to be down significantly, and revenue slightly up. You know, that's one. If they have a good quarter, this is gonna be one that pops for sure. Let's see. Rest of do you guys have anything you want to look at on this earnings calendar? I know Lowe's is going to be somewhat interesting. A couple of the guys in the server were asking about Neo. I don't. Neo and Mara, no, I don't think. I'm not going to be watching those at all. They're pretty beaten down. Target is going to be interesting. Norwegian also interesting. Norwegian is a little bit better operator from a cruise line perspective historically, at a pretty good level here. Decent support from a technical perspective. Yeah, I'm looking at this at about just under $16 is a good support. This one maybe you could nibble at. You look at Royal Caribbean on their earnings, so kind of gap up here. They're right about, they tagged right where they came from. So these are ones where it's not like super flushy. That's what I like, right? Carnival not coming for a while. Costco. Yeah. So Costco. Here's the thing. So Costco, that's my flip to the long side on SPY right there. So Costco, here's what I'll say about Costco. They release their earnings every month, believe it or not. People don't always know that. Let me see. Do I have? So Costco typically is not a huge mover on earnings, at least not historically. So this is completely flat. I'll show it to you this way. This little Costco. I usually do like a IV crush trade on. So here's the thing. Last quarter, 0.03%, straddle 3.7%, 4.2, 4.3. I don't think there was one quarter that you would have actually made any money on Costco. That was last December, where, I mean, everybody was having outsized moves on December. But historically, Costco is not something that makes major moves on earnings. So I would actually go flat. I'm not super worried about Costco. Target's one where maybe. So Target had this huge bottom right off 140. I grabbed these March like 170 calls like literally that day, but I did not hold them. Major fail on my end. But Target, I think, we look at Walmart earnings, which beat, but not a huge price movement. I mean, it's decent, 145, but then it sold off to 140. I think Target's in a different situation where Target's had some serious Target-centric issues. So the inventory situation is going to be definitely one to watch on these guys. If you get a shot like 155, maybe, but this one's more of a gamble, if you will, on Target. It could be a big mover though, because they've been beat up quite a bit. They're not getting a whole lot of credit for much. Yeah, let's see. So last quarter down 13%. So 1, 2, 3. So 50% of the time, Target, you'll make money on an earnings trade going long. That's one where like this one, you might get another one. So we'll see. All right. Lowe's would be interesting to me just to watch. Best Buy, C3 AI. I don't see how this thing stays up. These guys are going to talk about AI, but it's not really an AI. It's not that kind of company for sure. That's way overhyped. Unfortunately, we're seeing a lot of stuff about AI, and it's just kind of, I don't want to say it's discouraging. It's hyped, right? So like when we look at some of these things, Microsoft, when Microsoft was like, had this Bing release, this is where Microsoft was traded. It was almost like 380, right? And then since then, we've completely pulled all of that hype back. And here we are back to where we started, just around 250. I think this holds. I think this bounces. I don't I don't know that it goes any lower, at least definitely not this week. But way up here, that was all AI stuff, and it was just like clear, like this is not happening. The one that's still on my radar is Google, right? Where this is not AI hype. I'm not really sure what this was, but well, it might have been the Bard AI fail, really, like right around here, definite fail. So this one got, to me, overdone and is looking pretty constructive today. So I do like that. I'll look at a Neo chart, dude. I'll just say, like, there's nothing really I can take out of Neo's chart, like, at all. It's Chinese company, almost $15 billion here. You have major gaps to the downside. I mean, I bought Neo at 250. So I'm a little biased. I did not trade it all the way up here. Yeah, this downtrend's kind of broken. Let's say if I tinkered with it just a little bit. Here you go. If I tag this, so here, this does not look good. But it's $6 too, so I'm not really interested in shorting it either. Miss. Yeah, does Neo even move on earnings? I don't know. Up 11. No. Never once has Neo made money buying options on earnings. Never once. So I'd sell condors. Is what I would do. Or at least not in the last year and a half. All right, so KR Kroger. Kroger's interesting. It's like the one kind of pure play, I guess, groceries. They have an offer out to buy Albertsons too, I believe. So they'll probably end up talking about this. The stock does not look great here, although we're coming up on a pretty key resistance or support, rather, around $40 though. Let's see. KR. They move. No. Yes. 1, 2, 50-50 shot, but not a lot of what I'm looking at here, since you can't really see it. It's a little zoomed in. Is I'm looking at the implied straddle versus what the price actually moved. And if the implied straddle is less than what the price actually moved, then long options would have made money. This is 6 quarters, so a year and a half. Only one time did it make a little bit of money, 2 times, and then so 3 times out of the last year and a half, it's 50-50. That's what I'm looking at. And I would put a little bit more weight on the most recent quarter, if you will. So things like that. Let me see Zoom. So Zoom did not. Zoom used to be a big mover. Maybe it doesn't. It's already pretty beaten up. That's the thing. The question is this a breakout quarter for Zoom? Probably not. But does it go down much lower? I don't think so. So you might have an opportunity to sell some downside puts as like a potential level to get long. Yeah, you're talking about Neo, yeah, or Kroger. Either way, I don't know. Zoom, I just don't think it goes much lower. If you get an opportunity to snipe it around that level, these are the ones that I'm looking at still, right? Like PayPal, way down here. This is actually really constructive. It's a slow play, long play. Here, PayPal's price action, fairly constructive today. We'll see. We got to see how it holds. The thing about trading like the week's momentum, if you didn't know, sorry, some of these are a little funky looking at. The week's momentum is kind of like, if we're having a down week, most people put their major bets in at the end of Monday, early Tuesday, and then start closing them out by Friday. And on a bear market, you'll see this similar price action where like Friday ends up sometimes being like a massive green day in a bear market. And that's because people are like, well, do I want to go over the weekend short after I've had a big move? And so you see a lot of short covering. And then Monday, it continues a little bit of that bounce. And somewhere around the end of Monday, those shorts end up getting put back on, and you get that Tuesday, Wednesday, Thursday, just continuation in the trend, and then Thursday cover bounce, right? And it's opposite in the bull market, where it's like, okay, if we've had a big week, Fridays aren't always the best days, right? And then you get what we call like turnaround Tuesday. The whole reason of turnaround Tuesday is because it's that cyclical, I don't know, cycle, but it's like that weekly cycle of the markets where it's like the big moves happen Tuesday, Wednesday, Thursday, or like the sustained moves, the trending moves Tuesday, Wednesday, Thursday. Monday can be choppy. It could be this big giant green day, which completely reverses Tuesday, or opposite. But you got to think about the market in those types of cycles. So my biggest trading days, most of our larger trading days happen Tuesday, Wednesday, Thursday. At least that's just me. So, Monday trends, I don't typically expect to see a whole lot. So this week on deck, we have durable goods, home sales today. We can take a look at that. We have retail inventories and Chicago PMI tomorrow. Really nothing major. Normally we would have non-farm payrolls this Friday, but none of this is actually major this week. So durable goods, let's see. Did we get that number to this week? So durable goods we did get. So 4% consensus, down 4.5%. So this is spending. Orders just not. That's fine, actually. This is not bad at all. So we were up 5.1%, which is kind of like an outlier. Now we're down 4.5%. So we're back in line to where we were. If you take out transportation, this is right in line. So where did a lot of orders go? Like that left looks like, cars, that kind of stuff. Pending home sales, this is forecast down 28%, prior down 33.9%. Here we are again, down 24%. So pending home sales year over year down, but we have this little chop in the near term. Overall, that's down, right? That's what I'm saying. Like the home sales are coming down. Let's see. So we got one Fed speech today, which I do think did move the markets just a little bit. We have a couple more speeches later this week, so we want to keep an eye out for that stuff. Wholesale inventories really doesn't make a huge thing. Goods to trade balance, not going to be a market mover. Chicago PMI maybe. So expected 46. I don't think this is probably not going to be a big thing. Consumer confidence, Chicago Board Consumer Confidence. This May, we'll see if this comes in high, then that would be helpful for a bounce for sure. Oil status report comes in on actually Wednesday, so we'll get that here. I think OAH is actually looking very constructive still. 315 hit a low like just under $300 the other day. I was kind of nibbling at this personally. I think I let the server, or like a lot of the guys that trade with me know, also, but yeah, that looks fine for now. Maybe take a little trim as long as OH, if it sorry, I'm looking at another screen. If it holds over 315 tomorrow, this is that, what am I thinking about? If certain things hold certain levels through tomorrow, then I think we have a trend. Thursday, jobless claims, and this is that unit labor costs. This is quarter over quarter though, so not anything major. We're going up, but it's slowing, right? The speed of increase is slowing. 126.5 to 126.8, slowing. That's good, or it's constructive. It's not super bearish. You get another speech towards the end of the day, and then non-manufacturing PMI. We get manufacturing PMI Wednesday morning. This one could move the market. If this flips green, or meaning like if it comes in like a 50 or above, that's going to be bullish. Non-manufacturing employment and non-manufacturing PMI is forecasted over 50. So remember, over 50 is expansion, below 50 contraction. So we're getting kind of these mixed signals, and I think, appreciate that, Nick. I think the market is in that exact spot, right? So if we take a look, and we're just going to hop over to what we do every day, every Monday. I'm going to look at a 30-minute chart. I know there's a lot of lines. I'm going to try and clean this up just a little bit for you. But this orange box, by the way, let me get this. So the orange boxes that I have, and I'm going to pull this chart back. Orange boxes are an average week's range. So our average week's range has actually been getting smaller and smaller. Some of the guys asked me to resize this last week, and sure enough, it was definitely getting smaller. What we do is, like, I take the top of Monday. If we continue all the way to the downside, this brings us right into this major supply zone, which is in this green box down here, this lower consolidation. 390 is like the absolute low, but the ideal kind of level would be right in here in what we call, like, I call the golden pocket, right? So this is from this swing low to this swing high right here. That's a 618 to 65 retracement right in here. Currently, we're sitting in, from a fib perspective, the golden zone, which is at that 50% retracement from swing low to swing high, which is exactly where we bounced. And I mean, like, exactly where we bounced. And if I take this back and I just look at Friday, right? So this is Friday's price action. So we have this downtrend and we have this fair value gap right here, which I believe was from a CPI or something meeting. And this order block was like the key order block to hold. It also lined up with the very bottom of this trend. And I believe if we pull this, no, not quite. The bottom of this trend line, that ended up being the bottom. The 618 retrace, swing low to swing high, was like the key, like, boom, tagged it right here. So as long as we're above 393 this week, we're at least going sideways, if that makes sense. I don't have a huge amount of downside bets. I think if you get this range in your sights, that's fine. Could we chop down a little bit in the next 2 weeks? I think it's possible if the sentiment gets overblown to the downside. But again, this bigger line, and I'll just make this one just a little bit, I'll make it a little bit thicker, change the color to red. This line is an important one. So this is this big downtrend that everybody was looking at. So remember, if we're looking at these kind of downtrends, and even on a daily perspective, sorry, this is a lot of lines. I know it's kind of funky to look at. But this big downtrend, you wait for the downtrend to break, which it has. The downtrend is broken. And then you look for a retest somewhere around that downtrend, right around the prior pivots. And so this is why this level was so important, right? Like right in here. I'm constructive, man. I'm just constructive. Do I think that we, is it safe to be thinking that we like completely just bounce, like in an older market, like maybe I would have said something like, okay, we could get this, right? And then, completely go up. I don't think we're there yet, right? I don't think we're in that kind of market. What I do think is that we're in a range bound market that can be very choppy and trendless. And we have a broadening range from this last FOMC meeting, and that's what I want to take a look at right now. So this is this last FOMC day. This is the notes release. That day created like this massive broadening range, which we've been kind of chopping around in before. And then this prior, here's the main level. So on SPY, it's 403. I think on SPX, I believe this is going to be 4050. 4050. Let's see. Where is it? He's going to put a line and then. Yep. So 4050. If we get above 4050 on SPY or SPX, which is, it is that same order block right here. This is a FOMC release. I think this is the day that he had the speech. This order block right here is key. So 4050, if we're above 4050, then we can continue to chop to the upside until we get there. And on SPY, why did I just do that? That level is 403.96. Here it is. So this is FOMC right there. 403.96. And then we have seen session gap from last week. Session gap is like from, we had a long weekend, so Friday to, I believe this was Tuesday. This is a big fat gap, 407.21. So if we get near here, we start pushing up over this consolidation. This broad information here from this FOMC actually does bring us right up to this level, 407. And if this is the low of the week, right, on an average week's range, that would actually, thinking again, a little bit smaller sized week, that tags that level perfectly. So 407 to the upside on SPY, potentially a little bit higher, 409, but I would not push it much further than that. If we get, and only if we get below really this, I think it's a 397. 397 is going to be key. We have this bounce here, 398. Yeah, if we get below, I'm going to call it 397 and a quarter. 397 and a quarter, and essentially the bottom of this, then we could start targeting the lower ends of this broad information. But again, this sets up for a pretty choppy week. Otherwise, if you want to do this nice little iron condor situation, I might look at selling probably about 2 weeks out, or a week and a half out is usually the sweet spot for like selling 409 upside calls and selling 395 maybe downside puts. I don't think I think that range would get you enough premium to have a pretty decent IV collection, maybe 303, something like that. But I don't see a new range happening. This is, we're going to see a lot of this broad information stuff going on for sure. Couple people mentioned some like session gaps. So yeah, I see some session gaps, but I see these little wicks right here in the pre-market today that also filled them. So I'm not really looking at some of those gaps. I'm still looking at the other ones to the upside right now. So Qs bounced right off their 200-day last week. And I mean, just kind of continuing. So as long as the Qs hold, let's see, what is this point of control? And this is that main order block right here. This is 294. So if the Qs are over 294 tomorrow in strength, then we can go to the upside and we should see 308. Below that, when we're around that 200-day choppiness, you got the 200-day, 50-day, and the 200-week all really tight right in here. So downside, I wouldn't really be pressing a downside move any further below than 283. And you have this like defensive order block 282.80. So lower end of this consolidation would bring you right in there. I think choppy week, right? So the biggest thing to me, so this is the main chart for the week, is the Dixie, right? So the dollar, this is the Dixie, has been on this huge kind of like bounce. I'm going to call it a dead cat bounce. It was seriously trending up. This was all the rage, right? All the talk. Came back and tagged this 103 level, right? Which was the prior double top. And it pressed through just a little bit. But again, these levels are like kind of like trampolines where you get a little liquidity grab and it continues higher. But here's the thing. It stopped dead on its heels on Friday at the 20-week, just below the 200-day. So to me, this is one where it's moved quite a bit. The Dixie moved, let's see, this is 5% for the Dixie in 2 weeks or last month. I think this goes into like a consolidation range. And, if you're looking at the rates, this was the thing. If I look at the yields, let me see, yield spreads. It's a whole nother chart looking at these. I got a 1 month, 6 month. Okay, any day. 6 month, 1 year, 2 year yield. This is the thing, like a 1 month yield, 4.5%, a 6 month yield, 6%. These are massive moves. I mean, massive moves. So in the yield market, I think we're in for consolidation, right? Like this, the market didn't like when we're moving that far, that fast. It's not about the rate. It's about the speed of the change in the yields, right? And I think here we are. We're kind of capping out. I think we're near the top. Um, on the short end of this curve, we could get a little bit more, but I mean, between the 6 month, 1 year. Here's the thing: 1 year 4.8, and the 2 year 4.8. So these two are the 2 year really is the one that a lot of people look at. I think this is kind of going to go into like sideways formation, which is why I think this 1 month is like maybe it can continue a little bit more, but the short term loans, like the short duration bonds and T-bills, like this is a situation where it's way high. It's higher than it's been in like forever. Uh, I mean, this is going back to 2019 that it was 2.3%. And I don't even have any data further back than that. It cannot sustain this high. The only reason that this is this high is because the Fed wants to slow inflation, slow the speed of spending, and pull back some of that money supply. And the way they do that is by these short duration yields. And I mean, this doesn't happen that often, right? I was just like, I'll take this super, super simple. I just took like a calculator. Where's my calculator app? Let's say you put $100 in, multiply it by whatever. What's the yield on this curve? Again, 4.5. So 100 times 1.05, right? Once, twice, 3 times, 4, 5, 6, 7, 8, 9. 9 months. This is what your compound would be. Like, that's crazy. Let's say you put 100 grand in there. That's 62. Like, come on, risk free. That doesn't happen. Like, that's what I mean. Like, that's insane. So I think there's an opportunity for everyone. Like, if you're not into it, just like treasurydirect.gov, take a look, open an account, poke around. If you have a tax person or an RIA, I'm not one, talk to them. But I think it's something that, everybody should be looking into right now. It's an opportunity that is tough for me to talk about because I think there's a lot of money coming out of the stock market in the near term, which is what's holding us back from being able to really rally. But at the same time, it's providing a lot of really good opportunities. Yeah, so here we are. SPY is going to completely reclaim this. Watch this. So Dixie, this is that downtrend, right? Continuing down on the dollar. If we get below, here's this order block, right? So it's this level right here. So put the Dixie on your charts this week. It's this level, 404, call it 65. If we get below that, Tuesday, call it Tuesday, then we have a trending market likely to the upside. And the dollar continues its descent from grace. Let's say so, nearly fair value gap, nearly filled from this big sell-off. I think this is orderly. It makes a lot of sense, and this is bullish in general. The most bullish opportunities, I think, staying out of the equity discussion for just a second, because I think there's so much unknown there, is gold, right? So we look at gold and we look at silver. I bought a little silver this morning. Probably should have bought a little bit of gold. We've been charting this for God knows how long. This is GC gold futures, right back to a beautiful support level. And if I pull this back to like a weekly, you guys will see why this is like just such a beautiful chart. So I'll make one more line right here at this kind of triple top area. And this is the lower end of that consolidation. So if I zoom in just a little bit, here we are bouncing clean off this 1800 level, which was the prior breakout level above the 200-day. This, by the way, from a fib perspective, swing low to swing high is pretty strong, right? Like, this is not even 50%. So 50% would be 1796, give or take 100. I guess however you draw your lines, it might differ. Yeah, if you draw from that breakout level, that would be really here. And then that's a 1.8. I mean, this is why all TA is subjective. Sorry. But anyways, this is a constructive bounce regardless. Nonetheless, this is the prior breakout level. Came back, huge move, pullback, retest, nice support. At least this looks like we're in for a bounce, right? SLV, similar, right? Here's that top of this consolidation, and we're on it. We're on it right here, right now. And we'll see. This is one. Look at this support, resistance, critical level, breakout level. Here we are, right? What's it gonna do? I think this one, this is what I'm saying. I think it's a good buys. Just from a support resistance perspective, this is not trading. This is more like looking longer term. What is your downside versus upside? I think you have a decent shot at some of these like precious metal situations also. Nat gas, by the way, I said we were going to talk about it. I'm just going to show you this chart. Here's this level. NG is the ticker, like nat gas futures. We tagged just under $2. That's your like psychological level. We're bring this back quite a bit. So $2, $2, right? This is major. We tagged it just under it on a week 2-1 reversal. Or what is that? Yeah, 2-2 reversal on a week from a strat perspective. I don't even remember anymore. Anyways, it's going up right now. So as long as we hold this level, which was that breakout level of 2.6, call it 260. If we're still trending over 260 by tomorrow end of day, this thing's got some more upside. And it's like every 10 cents. If it's over 270 by tomorrow end of day, we're in breakout territory, right? And it's literally every 10 cents from there. So 270, 750, and to 310. Like it gets pretty wild. But can we get to 350 in the near term? I think so, man. I think so. As long as it continues that uptrend. If you're in a nat gas play and it's down 2 days in a row, yeah, get out, right? Because your trend is over, or a day and a half. Let's say you're done. For now, this is kind of sketch level because you're at breakout territory. You want to see this. You want to see this hold over 270 by tomorrow. Otherwise, tough spot. Yeah, dollar coming down. I like this in general overall. All right, I think that's mostly it. Do we cover? Let's see. Yeah, not a lot going on from an economic perspective. I'm just looking at nothing major. A couple speeches. UNG, we get the nat gas report on Thursdays. Silver looking good. I'm assuming gold's going to look the same. So yeah, pretty good. I saw a lot of the 169 GLD calls this morning. Not a lot, but enough for GLD. And silver SLV had these $5 call options for Friday going on at $5. I snagged a little. They're kind of lottos. I probably wouldn't say that normally, but 3,500 out today and 4,000 on the 2050 calls. Honestly, it's not for a big move, right? But if you go 1950 to 2050, that debit spread is $1 wide. It's trading for 7 cents right now. That's a massive risk reward if you get a little bit of a move on silver. So reclaiming 19 this morning, it's constructive. I like it. Cool. Yeah, I think we're good. If you guys have any other questions, just post them really quick. We're at time right now. Not a lot in front of us. Remember, this Friday we do not get non-farm payrolls, which is kind of an oddity. And then SPY, that key level SPX is 40.50. Here's the key level 403.81, 403.80. Can we get up there this week? Yes, we really could. And then if we could bounce up, we have this session gap to fill at 407. As long as we're not below, let's call it 397, below 397, it's not happening right now. And we just continue to go sideways. And we really start to look at some kind of like iron condor premium collecting trades. Cool. Sounds like my voice is going. And I think that's it for now. But yeah, super constructive, clean fair value gaps today from this morning. There's a lot of bears out there still, so be careful, be cautious, and I will see you on the next one. If you're in the servers, I'll put a link up. I'm thinking we do a full planning session for specific trades of the week about an hour after the close. So appreciate you guys. Give the video a like, share it. Paper Gains Inc. on Twitter. Oh, by the way, yeah, so huge schedule this week. Wolf has been like massively supportive on Twitter. Why is this taking so long to load? I don't know. But here's his schedule right here. So a little bit, I think it's like 15 sessions this week. So at Paper Gains Inc. on Twitter, follow that handle. You'll get a lot of the lives here. And then we're hosting with the full crew back Wednesday mornings live. Our crew, just our traders. So we will be there Wednesday morning at the open. I'll see you out there. All right, guys. That is it for me. Appreciate everything. Adios.